Gonna be putting in 3, 2, 1. Good evening, everybody. It's a new week, new month coming up this week, going into March. And we have ES up. First things first. I'm gonna take us to I want to go straight into monthly. Why? Because we are closing out this month's candle. And actually, I should actually be putting SPY here. So let's put SPY up first. There we go. All these levels that I have right now. Just gonna clean this up. I want to give you guys a clear picture, and then basically slowly break it down in details. All right, first off the bat, this is the SPY monthly chart. We're currently sitting at 428.64. So per usual, I always draw a horizontal line there. So we're gonna bring that to 428, 38. This can work right here. This is actually a good level to work off of anyway. Let's get rid of these down here. I just want to go straight into the basics. I'm not gonna feed you no crap about any news or anything like that. I just want to focus on what is in front of us, and that's the price. Chart. I give you this breakdown all the time. I'll show you how price responds with your 14, 30, and 20 SMA. Your 14 is the purple, simple moving average. Your 20 is the green, simple moving average, which is always going to be your average, which is going to be your mid. And then your 30 is your orange. Sometimes, and it depends on the chart, or if it's mobile, it will be yellow. And the 14 on mobile would be blue as well. And the 20 is always going to be green. So keep that in mind. So off of here, we got 404.10. This is this level here. We came close to it. That is going to be your 20 SMA. The price to hold above is the 14 SMA, 426.38. We're going to just use that level, keep it simple. Our monthly is closing in this month. This is an important level. Why is it an important level? 426.38, that is a breakout level. We broke out from June to July over 426.38, continued high, came back down. We retested. The low here was 428.78. So actually that should be the key. I want to focus on that level, any level here. So I like to go, let's move in a little bit, because I want to break this down to you guys. I want to show you how exactly I chart everything, how I work with every single level, how price reacts. I work with inside candles, outside candles, 2-day, 4-day, weekly. What am I looking at on ODT? Same day expiries, Monday, Wednesday, Friday, basically 15, 5-minute, first 10 minutes, 5-minute chart, last 10 minutes, same thing. 15-minute chart all day, always looking at that, very important. So I want to actually bring this up a little bit. Let's just activate that, drawing, bring it up. We're going to keep it here. So here, this candle opened at 428.87. 428.87 is going to be a very important level this week. I like to focus on the most important levels this week. Why? Because when you focus on the most important levels, that is the level that needs to hold. That is the level that you react to, whether you're long or short. Me, I am 100%, 1000%, 10 bags percent, 20 bags percent neutral to price. That's just me. I rather play what is shown to me that day rather than create a whole, how can I say it? A whole idea that it has a 50 to 50% chance of working out. And what that means is tomorrow at the open, I go long and I just hold long. You can't hold long because that you're gonna suffer from decay. Your price, your position is going to lose value over time. Because what happens with all these whipsaws, with all this news, which news falls into fundamentals, you're seesawing. Your account is going to be seesawing. So the best thing to do is trade what is visually in front of you in that moment, in that exact day. And that's another thing I wanted to address with you guys. Why? Because I see a lot of you guys always giving back. You guys give back a lot. You make your money. You say you're done. But then again, you see ideas, you see news come out for something, and you want to jump into that. You jump into that, and then what happens? You got that FOMO. That FOMO kills everybody. And what I want to do this week is I want to get you guys out of that FOMO. I want you guys to be done when I'm done, or be done before me. I have a thing where it's like, okay, I get into position, it's up. I've seen positions I get into. I can be in a position at 20K, 15K. My lady can vouch for this. It happened at the gym. I was in a position for nine grand. I was up 300% within 15 minutes. I think that was TTD that we had. And I talked about it all day. I'm like, oh, I could take profit here. I should take profit or whatever. And I took profit. I took profit when it was up 70%. I didn't take profit at the 300%, which I should have. The 300% happened after the alert that we had in the team, and you guys made money off of it as well. Me, I gotta follow the rule of take that 80% at the top, the rest of the 20% of that position. If it keeps coming down and does not hold that first support, take of that 20% left, take 10% of that off. If it keeps falling, cut the whole position. Doesn't matter if it bounces or whatever, cut that whole position from there. You already took the 80% at the top. So at that 300%, you took the 80%. And then from there, whatever happens to the price, you just wait for it to recover and see what it does from there. So that's what I want you guys to focus on. So this week is going to be a focus of, I want you guys to just be done for the day when you are done for the day. There's no getting back into it because there's another opportunity. You guys got to learn how to just let it be. This market ain't going anywhere. With what is currently happening, we're straight. We're good. We're good with price. That's what we can focus on. I don't want to sell you no dreams. I don't want to say, oh, this and that. I feel that even if I see a short term, I see a 10-point move on SPY within the day, the same day, I still say buy 2 weeks out, 3 weeks out, because there's people that are out there that and on the team that have like 50K accounts, 100K accounts, 500K accounts. They're playing with 10% of their accounts, and that gives them an opportunity to size a little bit because they see that opportunity. Either they get 20 to 50% on a 3 to 4 week or 2 month to 3 month position. 20% is a lot for that size of an account, and that's my main focus. It's like there's an opportunity, take it. Let's get out of it. We can trade it the opposite way. Let's do that as well. There's nothing wrong with that. All right, now let's get back into SPY. So we have our monthlies. Everything's already shaping up. I like to look at both sides of price. So what I'm going to do here, I'm going to create a line at both of my SMAs. All of my SMAs going to have a line created. Get your 30, your 20, your 14. 428.75 is a very important level for the monthly. If I was to go long, which 9 out of 10 I would, because I've seen this scenario happen so many times, my long would always be anywhere under 428.75. And what I would buy the first resistance level short term. And I'll explain that right now. So 428.75 is our first resistance level. Last Friday, where we closed 437.75. So we're going to keep that there. That 438.50. Wait, sorry. I'm sorry. I want this to line up here. So last Friday was 437. We closed at 437.75, right? We're gapping down 10 points. Yeah. This is just how SPY has been swinging, and that's how it is. This is when a market is this volatile. It creates the best opportunities. I'm sorry. This is why it's best to trade same day. You're trying to get long and hold, that doesn't work. You're trying to get short and hold, that does not work. You trade what you see, what's presented in front of you, because you can be long. The market could gap down tomorrow, which it's going to do. And by morning, we get into a position. Now the market is green by noon. Next thing you know, you feel like there's a sell-off going to happen. You take that opportunity, you go short into the close. Or market opens flat, it spikes up tomorrow, or it fades down, and at the end of day, it pushes up. There's so many different outcomes that happen, and I just want you guys to be ready for that. So this is how I'm going to get you guys ready for that, plus a new month going in. Looking at these monthly candles, they're not that bad as people think. So March is going to be very interesting. Give me a second. Hey, TOS does this. I'm trying to adjust. Here we go. All right, let's clean this up. So from last month to this month, we got some wicking candles. These are something to note. Let me clean this up. The width of these candles is too thick. These lines are too thick. Sorry. Clean that up. Clean that up. Clean that up. And clean this up. Here we go. Let's get back to it. So here's our monthly, right? So this is our focus. So 428.75 is going to be very important. So tomorrow is the 28th. This month, let's look at the calendar real quick. Give me 1 second. I just want to make sure. Tomorrow is the end of the month. So this is going to be the best same day expiry trade and the easiest. So this gap down, I'm loving it. 428.75, anything under is a gift. What I'm going for at the open is 430 calls, hands down, same day for Monday. I'm giving you guys a same day trade. You scalp it in and out. That's all you have to do. If you are jumping to any trade and you have over 2 contracts, you have to allow yourself to scale out. So you sell 1 and that's that. You have 3 contracts, you sell 2 and let that last one ride. I get it. You guys see profit, you take profit, and that's the name of the game. But for those that always have that issue, like, oh man, I should have held and blah, blah, blah. Listen, let me tell you something. It happens. But sometimes if you want to see that full profit, you want to get that full profit, you have to let a runner run. And that's exactly what we do. So with this monthly here, like I said, 428.75, we're going to focus on that. So I go straight into the weekly chart. Best thing about ES is it actually does all of that for you. It already starts for the new week. I'm sorry, like this candle, we're opening here at 428.75. If we stay below that, then there's a concern. But immediately I'm looking at Wednesday's 440 calls. Why? We have a wick here for 221, and we have a wick here for 124. 2 hammers. And each hammer basically has a closing literally at that exact same level. And I'm going to show you that right now. So I'm going to duplicate that, bring that up a little bit. You can see here. So 431.75. What I'm buying at the open for same day, 432 calls. Anything under 428.75, targeting 431.75. Go. Now, if you want to add your extensions and your Fibonacci's, we can do that as well. And I'll show you exactly how I do that. It's not rocket science or anything like that. I'm going to show you that right now. Everything is based off of significant levels where prices bounce, where they hold, where they close above. For example, 404.13 is a very important level. That is actually where the gap starts to fill at. That did not happen. So that does not mean that we're not going to see that anytime soon, or we're going to see that in a couple of months from now. We do not know. So I want to show you how I'm going to use my extensions. So first off, I like to use my extensions off of 14 and 30 or 20 SMAs. I like to see what the price basically held. So here, 1026, this low here, we can use that. Now I'm going to bring it all the way up. I'm going to start looking at candles. I'm starting looking at levels, and the level that bounced at here was 3-1. We can use that, but then I want to see the next level that it bounced was here, this 14 SMA. It's a double bottom here. So what I'll do is I'll go to the high of this candle, and I'll bring that right down to this level here. And this is what happened. This is the results. Now, with that results being there, I'm going to get rid of the levels that I already drawn, which actually line up with those results. This is the best thing. That's the best part about Fibonacci extensions, retracements. If your levels are correct, the fib levels should be literally on top of your level. And a lot of people don't understand that. If your fibs line up with your levels, that means you're doing something right. And this is why I tell people price is very important. Your levels, always important. So we have that hammer above, and let's get rid of this level that I drew, this one. We're going to keep that 438.57. I just like that level. So 431.79. That is going to be the level, or 432. We round it to 432. That is going to be what I would buy in calls. You can buy Wednesday calls or Friday calls at 432. The safest would be Wednesday and Friday. If you cannot stand decay on same day expiries, ODTE. And I love how we're holding that 431.79. We're gapping down. Fine. 428.10. That is currently where ES is currently at the moment. Now, if we go into the 4 hour, let's see if they should have already opened it, unless I don't have that on this computer. Nope, I don't. Actually, let me put that on right now. Futures, extended hours is actually on, so I don't know why it's not showing. Oh, this is SPY. Oh, SPY is not futures. Equity. SPY goes on the equity. I don't know why I got it that way. Here we go. Even better. Perfect. Now, this is what those levels, this is exactly how they respond. So that 438.57 level that I drew, right? Look what happened there. We're creating an inverse head and shoulders. 428.10, best part to get long. 14 SMA is below the 20. Once the 14 and 20 cross, that is a signal to get long. 428.10. We want to see how that responds. 420, even 423.55, I like it as a buy as well. But price is going to maintain from 14 SMA to 428.10. And I'll draw you an arrow to show you 14. Like I told you, this is all three of these SMAs. Your 428.10 is your key. That level you must watch. Depending on how we open tomorrow, watch that level. Now for this week, I want to, so everybody, I know a lot of times you ask me, okay, how you average down when it comes to milli and so forth, right? So I'm going to show you guys how that works and how I do it. I'm going to do it basically strictly just with price. Averaging down is not something that can really be taught, but in a sense it can. I say it can't because it's like if you followed my averaging down method, you'll run out of powder, because just by me alerting when I'm in and whatever, when I average down, I explain that to you guys. But we're going to use a daily chart for now. So this is Melly. I love this stock. I love it a lot. Learned it. I love trading it. It's a fun stock to trade. It really is. So first off, my first thing when I'm looking at any chart going into the day, bring up your weekly. So look at my weekly. This is a Fibonacci retracement. I went from all-time highs, which is 2020. How significant is that to the T? and that was like the perfect short, all the way down to 83.95. I didn't, that should actually be the bottom. If that's not the bottom, still it's close to the bottom. And as we zoom in, looking at the weekly, like how prices react. You got 1878.32, 1653.29, 1282.78, and then we have 875.41. We bounced over 875.41, and we closed at 1111.39. The odds of that. Now, strictly using levels, now what I do is I go into my 15 and 30-minute charts. Now I'm ready for the day. We created a nice 15-minute W pattern as well too. And then we turn off my extended hours, because this live is basically focused on bettering you as a trader and sticking to a plan and how to get in and out of that plan that you have set for the day. It should be every single day. So since Monday's coming in, we're going to have a gap down. I don't know how significant this gap down is going to be, but since buy is down 10 points, that would put Melly at, I'm going to say 30 to 70 points gap down. How you can tell what usually happens on a gap down is you start drawing levels the day before. So I go to my 4 hour, I look at my 14 and 30 SMAs, and I like to see what would be a nice gap down spot for this ticker. So it's about 4 hour. So if Melly is at 11:47, if it gaps down similar to how SPY is gapping down, like I tell you guys, overdraw your levels where your SMAs are. Here's 1. Here's 2, which is your 20, and then here's your 14. For me, the best buy would be at 1004.16. Anything below 1041, honestly, I would start my position from that level. So we had a nice candle combo, but what happens over the weekends, we can't control that. So now we get a gap down. That gap down either comes down, we lose 50 points, which is 1053, giving me a relong at 1111. So if it comes down to 1053, I'm taking 11, 10 calls, or anything close to that, within 5 to 10 points of that. So now how does the average down strategy work? Start with a 15-minute chart. And what I usually do is I like to use a retracement tool. Mine's is custom. So I'm going to go as far as a week ago, maybe 2 weeks or 3 weeks ago. I like to find the most closest high from the last price, which was 1111. So the closest high is 1177.16. That is the closest from 1282. So I'm going to basically break that down too. So what I'm saying. So I'm going to, oh, hold on. I don't know why it's not. Oh, that's a percentage. Sorry. Oh yeah, I was doing a Fibonacci here. Let me just draw this level for you guys. Bring this down to here. Okay, get rid of these levels that I drew. They should always match up or be as close as possible. And here you have it. So going into tomorrow, let's bring up 2 charts. Another Melly chart. This is a weekly. We're going to bring up that 4 hour again. So here's your 4 hour. So this is white on that screen. We got to change it. So we're going to change the color. Orange. All right, perfect. I'll just keep it orange for now. So we got a rejection at 1117.80. That's why I took 99% of my profit, because I'm 90% cash going into tomorrow. Now I'm looking for 1057.15. That lines up here. That's just below the 1430 and 20 SMA. Here, that is actually the 20 SMA and the 30 SMA. that will be a nice buy. Anything under 1057, I will start a position for 1100 calls same week. So how you average? So using a 15-minute chart, you start at 1057.15. We get that gap down. We gap down under it. We start there. Now you look at your gap. So we closed at 1117.80. You want to look at the prices between 1117.80 and 1057.15. I note this for you guys. So these are your prices you're watching here and you're watching here. Now, when the price opens tomorrow, let's say 1057, that's here. It gaps down to this level here. Your first target, you start adding 1083s. That can be weeklies, but if you want to be smart and you want to salvage your capital, you buy a week out or 2 weeks out. That's your first target, 1083. Next would be your 20 SMA, and after that would be your 14 SMA. Another smart thing a lot of people don't understand, this is actually a gap down. It's not a gap up and then a fade. It's not a gap up to 1117, then a fade to 1057. That will make it a bearish move. A gap down off of a 4-hour candle combo is actually still considered bullish. But as long as we stay above 1003, which is 1003.84, that is your 14 SMA on the 4-hour chart, it continues to remain neutral and bullish. Trend remains where it's at. So when you're averaging down, you will start at 1057. You can, what I like to do, another thing I always say this as well is there's no limit to how many levels you can add on a chart. If you're trading off the 5-minute, 15-minute, 10-minute, you're a scalper. So here I would draw a level right here. This is a significant level. This gapped up to the 14 SMA, then it faded. So I'm going to use that level, 1031. So under 1057.15, your max add should be 1031. You shouldn't add anything after that. You should start cutting your position from here if it doesn't hold here. So in between here and here, you get long. Your first target when in this zone, your 30 SMA. That is your first target. So keep that in mind. So that is like the easiest way to scalp. You never size the first entry. And I always say this, do not size the first entry. Do not size the second entry. The third entry, you should start sizing. You only size if you see that that level is sticking, it's holding. It is a confirmed support or resistance. A confirmed resistance is something you have when you're going short. A confirmed support is something you have when you're going long. So when it confirms support, 1031.14 holds, it sticks, your first target is that 14 SMA, 1083. But we break this down. 1031, if that is your ad and your last ad, well, that's your first ad, and you just keep building off that 1031, you're gonna buy 1057.15 calls. Because that price, that level comes before the 30 SMA, the 20, and the 14 SMA. Your levels and your SMAs are all you need when you're trading long or short. Everybody complicates a lot of things. When you have your levels in play, it causes you to either cut the position if it doesn't hold, and it also causes you to hold a position if that price does hold. So that keeps it as simple as possible. And I wanted to focus on that. So that is the best way I can explain to averaging down. And when it comes to same day for SPY, you always start, like if I have a max, I give myself a max for a position when it comes to SPY. Like if it's same day for tomorrow, I give myself max depending on how much the contracts are. If it depends on how the contracts are priced. Based on how the contracts are priced, it will tell me exactly how many contracts, the max contract I would buy in this position. So that basically goes to how many I start. It's like, let's say if my max is 20 contracts, my first entry is going to be the test. It will be 5 contracts. That leaves me with 20 contracts left. right? So we're doing 25 contracts. No, let's say my max is 25 contracts. So I will start with 5 contracts. My averaging down would be 2 contracts as price moves down, and it holds each, and it tests each level, and that also includes decay. You have to always include decay with your levels. So if your level is 11, 17, 80, no, sorry, that's a resistance. So 10, 57, 15 to hold. If it stays there all day, you just cut your position down to 20 to 10% on the same day. No, well, actually 10 to 20% on the same day. Now it's lunchtime. Now 2 hours pass after that, that's already cutting 50% of your position because the premiums are killing. They're killing. This is why I say the first 30 minutes of the same day, you scalp it and then you wait all day. It doesn't matter how lunch is. It doesn't matter or anything like that. By lunch is when you start to watch and see how price reacts. By 2:30 p.m., you watch where the price is from where it was at lunchtime. And you get a feel of what's going to happen towards the end of the day. And that will have you react. That's why I'm always like, okay, that's it. We'll wait to see what price does towards the end of the day. And then we'll start looking at positions and we'll start looking at what we're going to do. And that's how it works from there. So I wanted to just break that down with you guys, averaging down, going into the week with SPY. I just wanted to keep it as simple as possible. We're just going to strictly trade levels. That's it. If a level doesn't hold, you cut the position. You should not be in a position very heavy if you can't afford to take that loss on it. Same day position that's expired same day, which is SPY, you're going to lose 75% of your premium quick, of your position quick. Because SPY, the way how volatile it is, how it swings up and down both ways, your position is going to cost you just off of SPY by itself. That's why the first 30 minutes to an hour is the best time to trade it. After that, you should not be. You wait till lunchtime, no. After lunchtime, no, you wait till end of day. You want premiums as beat up as possible. And then that makes your capital, which you're playing with $50. You're like, oh, I can risk $50 end of day. And I don't care if it goes against me. You can make either 50% on that $50, 100%, 20%. It does not matter. But if it goes worthless, you already know that was something that it didn't matter. It was something that you can afford to lose because you already made your profit early in the day. And there's people that actually trade just the first 30 minutes to an hour, and there's people that just trade the last 30 minutes to an hour, and that's it. They're done for the day. If you swing overnight, that's on you. You should not be swinging if you can't afford. If you're the type that gets anxious over being late or get anxious because once you get in a position, you're like, oh, I don't know what's going to happen. Oh my God, oh my God, oh my God. You should not be swinging anything overnight. You are a day trader. You should be trading same day, scalping. Cash account works. I'm telling you guys, you can play with $500. You can do so much with that on a cash account. You use 10% of a cash account. You play the right tickers. You got XLU increments of 5 to 10 cents when it comes to premiums. You got GT, same thing, 5 to 10 cent premiums. You find those tickers that have cheap premiums that are trending right on the chart, whether it's long or short, and you manipulate that. It's why when everything is out of balance, we have our safe havens we run to. XLU, because that's one that we know how to play both ways. So we stray away from that and go to something else new because we want to learn that. And we like how it moves. It attracts us. The way it moves, how the price reacts, it attracts us. So I just wanted y'all to keep that in mind going into this week. Focus on one ticker. For me, it's always the same tickers. Like I don't change. That's just me. So you have any questions or anything like that? I'm going to stop this right now.